Welcome everyone to our autumn update on the R&D landscape. For the interested student, I'm sure, who's been following some of the debates that have been going on over the summer and maybe has experienced some of the turbulence that we're seeing in the overall R&D environment. This is really just a summary a session to summarise what are the key things that are going on at the moment, and as you're entering into maybe your final quarter, as you start into thinking about planning and preparing your R&D, some of the things that you might need to be cognizant of, to be aware of, and maybe adjust your planning going forward. But as I say, welcome everyone. Just as a quick introduction, I'm David Bone from the More R&D team, and you'll have noticed my colleague Tom, another director from the More R&D team. We're a specialist R&D team. I know I look young and youthful, but I've been doing R&D claims for nearly 20 years now, and so I think it's fair to say in that time scale, there's never really been the degree of turmoil and change that we're seeing at the moment, and so this is quite a timely opportunity for you to get up to speed with what are the changes that are taking place with the R&D relief scheme, and positioning it within the broader incentives available to you for performing innovation or investing in the company, but also then to think about how you're going to take things forward. What are the implications for you as you start to enter, say, a new planning cycle or a new preparatory cycle for your R&D claims. This session, Zoom, obviously, that there are sort of interactive elements to that. If anyone does have questions, there is a button there that you can raise your hand or type in a question in the Q&A. Please don't hesitate to do so. Having experienced professionals like Tom and I on the session gives you an opportunity to sort of ask those burning questions, all the things you wanted to know about R&D we're afraid to ask. This is a great opportunity for you to do so. So we're happy to keep this as interactive as you wish. I mentioned sort of that some of you may have been aware of some of the changes that are happening with the R&D scheme, or may have seen some of the press and the commentary from the professional bodies on this. And this is what's really triggered this session today. We're conscious that there's a lot of new information about the R&D scheme, and we'll be taking you through that. But we're also there's a lot of sort of uncertainty and doubt around the scheme, and it might be helpful for you to place this into context. We're aware that some companies, having seen some of this news, they're thinking about, well, is it even worth making an R&D claim? And our response to that is, if you're doing R&D, then you should be confident about making claim, and hopefully what we'll talk you through today will help you be best placed to make that claim and make sure it's a robust claim, and helps you secure the benefits that you are entitled to. So what we're going to go through today is just a quick briefing really on the overall landscape. What other what other schemes of government support are available. Talk through the different R&D schemes that are available to companies at the moment. There's been some significant changes for that. And then just Tom's going to give us a quick primer on what we mean for R&D for tax purposes, without stealing his thunder. That hasn't particularly changed, and so it's important that everyone is familiar and cognizant with that. We'll then go on to some of the structural changes to do with the R&D scheme. So there are a number of significant legislative changes that are influencing how what claims and what benefits are available to people. And there's also some new protocols about filing claims that especially for companies with a March year end, they need to pay particular attention to that at the moment. So having talked about some of the functional changes, as it were, we'll then talk about some of the softer changes around the scheme, talk about how HMRC are processing claims. You'll have seen a number of maybe news stories about that, or you may have experienced the compliance checks that HMRC are raising with respect to R&D claims. So we'll talk you through some of the environment within which those claims are being processed. And then at the end of the session, we'll finish off with how companies can respond. So some of the things you need to think about now to help you put your best foot forward to do with claims. If you are caught in a compliance check, what you might be doing, how you might think about progressing with that. And then just a reminder, I'm sure you appreciate all of these sessions, there's always this sort of, you have to sing for your supper, the importance of choosing a trusted advisor for this. We know there are a number of rogue advisors in the marketplace that are purporting to help companies make claims. We're seeing a bit of a shakeout in the market, but just really sort of some of the things you need to think about when you are choosing an advisor to help you with your R&D claims. Okay, so unless there's been any other initial questions, I'll move quickly on to the just the sort of the broader landscape that we're facing. It's worth saying right off from the start that the new Labour government, obviously, they put growth at the centre of their number one mission, etc., etc. So we know economic growth is going to be really important for this government. Within that, innovation is the engine for the growth, and the incentives are the fuel for that innovation. So it's a bit of a trite statement, but we know that these innovation and investment incentives are going to be a focus for the new government. What we're expecting to see is a slight change in emphasis from that, rather than some maybe perhaps the more market-led R&D innovation that you might see characterised by the R&D tax relief. We may see a start to more emphasis on more direct support for innovation through grants and whatever. And so in this changing landscapes, it's really important for you to think not just about the claims you make with the R&D, but putting it into context within all of the different innovation incentives that are available to you. So when you think about R&D, do also think about the different grants that are available to you. Some of those are, the Smart UK, the Innovate UK type grants. Some of them we're back in the Horizon programme now, so they're EU oriented grants. There may be some regional grants that you can take access to, you have access to. But grants and the R&D relief, again, they're just two of the arrows in the government's quiver, as it were. So we've also got Patent Box helping companies who've already built up their IP and they're starting to commercialise it, to encourage them to commercialise that in the UK. You'll have seen some changes over the last couple of years with respect to capital allowances, the move to full expensing, but that still leaves, there are some significant capital allowances that are available for buildings and facilities, that making sure that you're maximising those as you start your investment cycle is important. But it's also worth being aware of, say, maybe some sector-specific schemes, such as the creative reliefs, or some of the regional specific support, such as available through Freeport. So when we talk about R&D, which is the focus of today's call, do think of it in the broader sort of environment as to what other types of government support are available to you, and perhaps how they interact with each other. Particularly, I'd pay a bit more attention to grants going forward, because that's likely to be an increasing feature of the government's incentive landscape going forward. So just a quick recap on the R&D scheme then. It is the flagship policy for the government's support for innovation. 90,000 companies made claims in the last year that we have the stats available for, receiving 7.5 billion, 6 billion of support. And if you put that into context of sort of how much they're saving with things like the winter fuel allowances, or the other areas the government's support with, say, reducing national insurance for a couple of billion, you'll see that this is a very significant amount of money that the government makes available to companies to support their R&D. As I say, it is the largest scheme. Traditionally, there have been two schemes, one directed towards SMEs, small and medium-sized enterprises, and one for companies who aren't SMEs, RDEC, or who can't claim under the SME scheme, RDEC, Research and Development Expenditure Credits. We'll go through this later on, but these are now merging. So the SME scheme and the legacy R&D scheme are now being replaced by a single scheme, the RDEC scheme. And as a slide says there, these benefits are all receivable as a cash credit. Lots of companies haven't got tax liabilities, and in those environments, delivering the incentive just as a tax reduction wasn't hitting the spots that the government wanted to. So all of these are genuine cash, available as a genuine cash, refundable by the government. if we move on to the next slide, Tom, I don't know if you want to pick up here on what we mean by R&D for tax purposes.
Yeah, no problem at all. And I think, as mentioned earlier, there hasn't really been any changes to this. There's been a couple of bits here and there. So the allowance of mathematics as a valid sort of field of science or technology. But at the same time, this is probably still the most important and simultaneously the most controversial and misunderstood part of the R&D scheme. So what does the legislation, so the Bayes guidelines, essentially say? Well, it says that a project that seeks to achieve an advance in a field of science or technology through the resolution of scientific or technological uncertainty is R&D. So there's a couple of bits in that are really important. You can see two of them on the screen, but I want to highlight some of those areas. So this idea of an advance, essentially meaning making something better, making knowledge or capability better. Now, the key part to that sentence is this idea of it being within science or technology. So there's a hell of a lot of projects out there that businesses undertake that are making something better, making knowledge or capability better in some way. But that doesn't necessarily mean that it's making specifically a field of science or technology better. And this is often where that sort of misunderstanding occurs, or where people get into difficulties. So, making a software that has a functionality that is, or a feature that is better than what others in that specific industry, so be that, FX systems or something like that, doesn't necessarily mean it's going to be R&D in its own right. You've got to look at that and go, where is the advance within one of our valid fields of science or technology, be that, software engineering, be that data science, be that computer science in some way. Where is that specific advance there? So what is that sort of baseline of technology or current state of the art that this advance is being measured against? To some extent, the advance that we're talking about is the delta. It's the difference between where you want to be and where you started at the beginning of that project. So to sort of summarize that point, that idea of science or technology, that idea of a field of science or technology is absolutely key. And it is where I see most companies become unstuck with this. Overall, with the Bayes guidelines themselves, there is generally, I would say, a bit of a change in the way that HMRC has been understanding these, in that they've been focusing much more on that idea of what the field of science or technology is. I think over time, this tends to act a bit like a pendulum, where it goes from understanding the legislation sort of to allow a broader range of projects to qualify, to understanding it where it allows a narrower range of projects, and over time that's going to tend to sort of a 0 point in the middle. But I just want to really reiterate on this. There hasn't actually been a change to that legislation. It is the same today as it was 5 years ago, with the exception of mathematical sciences being allowed. It is just that companies are really needing to focus more on what that baseline is and what that field of science or technology is. So moving on from there, I'll pass you back to David for some of our actual legislative changes, as opposed to what I've had in for my slide.
Yeah, so thanks, Tom. So whilst the definition of R&D hasn't particularly changed, I mentioned before, I've been doing this for 20 years, hasn't changed in nearly 20 years. The environment around which and the nature of the qualifying costs with which you can claim for those R&D activities has changed fundamentally. And companies who've been making R&D claims, you'll have been aware of a whole series of piecemeal changes and some significant changes that have happened over the last couple of years. I'm not going to dwell too much on those, but I've highlighted a couple with respect to, say, some protocol changes, so that the need now to file the claim with HMRC, including more detail on the claim in an additional information form that was introduced last summer. So hopefully that's starting to be embedding in your processes. And then also last year, you'll have seen, especially for SMEs, there was a significant drop in the level of benefits that were available to companies. So this was part of a rebalancing effort where they're bringing together the benefit levels broadly from across SME and the larger business community. As I say, I'm not going to highlight this too much, just other than to make the point that there has been substantial change, and even with those substantial changes, the current changes are by far still the most significant changes. So what you've done in prior years to prepare claims, whilst the eligible activities have stayed the same, how you're having to prepare claims, the level of benefit that you're going to get, that how you support the claim under a compliance check, all of that has significantly changed over this time period. And so what I'm going to do in the next couple of slides, or Tom and I are going to do in the next couple of slides, is talk you through some of those most significant changes that have come through that are applicable to you. So the first one, and I alluded to this earlier, is that what were previously the SME schemes and the schemes for companies that can't claim under the SME scheme, the RDEC scheme, they're now being merged into one. It's retaining many of the characteristics of the merged the legacy RDEC scheme, in that it's above the line credit rather than the enhanced deduction that was familiar with the SME scheme. The benefit level is a 20% credit, so if you spend £100 on R&D, you can get an above the line credit, taxable credit of £20. Then you can get that refunded to you net of cash, net of tax. Normally, you'd apply the 15% tax rate and get £15, but the government have been particularly generous and allowed us to get 16.2% of the qualifying expenditure back as a cash credit. In introducing the merged R&D scheme, there are, however, some significant differences. Some of them are consequences of the different characteristics of the SME regime and the legacy RDEC regime, where they were just operating in contradiction. So the most significant change is probably the treatment of contracted out R&D work. This is a really nuanced area. There's been a couple of attempts by HMRC to define what they mean by this, but effectively we're saying that if you're working with customers or you're working as part of a supply chain, you'll naturally be working with a number of other companies on who can claim the R&D for the projects that are arising from that. And the government are changing how that's going to operate. Broadly speaking, the further up the supply chain you are, i.e. the closer you are to the decision maker who initiates the R&D, then the more likely it is that you'll be able to do R&D. If you're in receipt of contracted out work and the person who's contracted the work to you is a relatively knowledgeable company, that they're able to specify it with a degree of confidence, then it may mean that you'll no longer be able to claim that. This is going to be a significant change for many companies, both the larger and the smaller companies. And as a consequence, this is where you really need to revisit how you're preparing the claims if you're working with your customers or your suppliers in your R&D projects, to make sure that you understand the extent to which you're initiating or considering the need to perform R&D, or whether you're passing it down the line or you received it from your customer. So there are very significant implications for this. As I said, HMRC have had a couple of attempts now at trying to define how the new system will work, but basically it's going to fall down to the facts and circumstances within your environment. It's quite a nuanced change, and whilst I'm sure you'd say, I would say this, it is worth talking to an advisor and helping you make sure that you understand which side of the line you're likely to fall on with respect to the new treatment for contracted out work. So that's probably the most significant change. Other changes, though, depending on your circumstances, may be as significant. Probably the most significant consequence of those other items is the fact that overseas R&D costs now no longer qualify for the scheme. So previously, both the RDEC and the SME regime, they weren't territorially specific. If work was being controlled and supervised from the UK, but being performed maybe in a low-cost economy, or you needed a specialist centre overseas to do that, then to the extent that was recharged into the UK, then you could claim those costs. You'll no longer be able to claim those costs. There are a couple of exemptions on there. You can imagine companies doing pharmaceutical trials that need particular cohort of individuals to do it, or they need to do testing of a car development in an ice field. That they don't happen very often in the UK. So you'll need to do R&D, say testing overseas as part of that. So there are some specific exemptions for that, but you can't claim exemptions based purely on cost or the availability of resources. So for many companies that are including overseas R&D costs in their scheme, they will need to reassess the extent to which they may be able to fit within some of those exemptions, or the consequences of no longer being able to claim for those resources. It might encourage them to onshore some resources or whatever the case may be. But the key change coming through for the merged RDEC from the applying to companies' accounting periods beginning 1st of April 2024 onwards is that it's whether you're an SME or a large company before, there are changes that you will need to take into account in preparing the claims after that date. Okay. I'll pass on to Tom now, who'll talk about another scheme, colloquially IRIS, but Tom will take us through.
No problem at all. Yeah, I think it's one of the ironies of tax simplification when they go, oh, it's a bit complex having two schemes running at the same time. So let's merge it into one scheme, but then let's have a special opt-out or a special extra scheme that's going to be for a certain type of company. And also it's all going to come in at a certain time, but at different rates. So in effect, at the moment, we could be submitting claims under 5 different schemes and one of them being under 2 different rates, which considering it was supposed to simplify it, I think it's done the opposite. Obviously, I can't complain too much as I'm an advisor to help people with this, so it is my business to help here. But talking a bit more about the R&D intensive scheme. So essentially, there are certain businesses that are really focused on R&D. The idea behind the scheme is to say, well, those businesses, they do really need the support, and as well as that, they're exactly who the government should be wanting to assist with R&D, because it's great for UK PLC as a whole. So let's have a slightly enhanced rate for those businesses. Now, it's based on the old SME scheme. So unlike the RDEC scheme, where it's sort of it's a set percentage, you get back this amount if you spend this amount. It's more similar to the old SME scheme, where it's essentially a super deduction that you can then surrender some of those losses that are created for a tax credit. So it is essentially a continuation of the scheme that they've gotten rid of. Now, you qualify for this if you're an SME that is spending a certain amount of your total expenditure on R&D activities. However, what they have done with the rules is made it very, very difficult for businesses that have some sort of overseas presence, be that a parent company or be that that they've got, a sub or a connected entity or something like that. They made it very difficult for them to qualify. So I would more think of this as the enhanced UK R&D intensive support, because that's who it's going to, that's really who's going to benefit from this. What I mean by that, and I think looking at the names, I think some people who are listening into this have experienced this as well. But you're aggregating the total group, so that includes any linked or partner enterprises, the total group expenditure, and you're using that as your denominator, and your numerator will be your UK R&D expenditure, so what qualifies for R&D tax relief in the UK. So essentially, if you've got something going on, even if all that your business does is R&D in all the locations in the globe. If you've got something going on overseas, then you'll have expenditure there, but those costs aren't going to qualify under the UK R&D tax relief scheme. So essentially, you're going to be making your denominator larger, but not your numerator. Considering that the thresholds are, in my opinion, quite high anyway, at 40% and then 30% 24 onwards, it does pretty much rule out businesses with overseas entities. To me, I personally think this is ridiculous when a big part of the scheme is there to encourage foreign investment. But what I would say is this is just something that people do want to be cognizant of, because I've seen it trip people up before, and it's not something that you would initially think. But if you're not affected by that side of things, then this is a great scheme. You're getting a much higher net benefit than what you would get under the merge scheme or under RDEC. So it's definitely something worth looking into. And it is something worth doing your calculations on at an early date, highlighting that you might be qualifying for this, because the calculations do take a bit of time. If anyone's interested, it's S1054ZA. If you type that into Google, it'll come up with a page and you'll see that it's needlessly complex. As I say, ironic for when this was all brought in the guise of simplification. But I'll pass you back to David for the next slide on here before I bang on too much about simplification and make it sound even more complex.
Yeah, thanks, Tom. And obviously the IRIS scheme is there for focusing on startups, maybe scale-ups. But as Tom said, there are a few gotchas in the scheme. So the merge scheme and the IRIS scheme, they're being established now, and that they'll take forward and go forward. And obviously, that's something people need as they start to plan claims, as they start to prepare the support for claims, they'll need to take on board. What I wanted to flag on this particular slide is something that has probably flown under the radar for many companies. I know we've published at More here, we've published some insights around this area, but we're still seeing a number of clients who haven't necessarily are aware of it. And that's a change introduced by the government last year, saying that if you're intending to make an R&D claim, then you need to pre-notify HMRC. I'll talk about the rationale for this in the later slide. It's part of HMRC's attempt to sort of reduce fraud and error in claims. And one of the aspects of that is they're making sure that companies must pre-notify the intention to make an R&D claim. So this was introduced for claims after 1st of April 2023, for accounting periods beginning after 1st of April 2023. But there were some exceptions, exemptions allowed for that pre-notification. And in particular, if you've made a claim in the last 3 years, then you don't need to pre-notify HMRC. So if you've got like a rolling record of making claims. Unfortunately, or surreptitiously, HMRC have introduced a couple of caveats to those exemptions. And one of them specifically is that if you've made claims as an amendment to your original tax return, rather than filing the R&D with the original tax return, then you may not be exempt from the need to pre-notify. Now, many of the companies that we work for, the R&D relief is really important for them, that they try to get it as quick as they can after the accounting period end. And so it's often the driver for them to complete the original file return. And so they make the claim within the original file return. And so if they've made it within the 3-year window for prior claims, then they don't need to pre-notify. But there are a number of companies who will file their original return, perhaps on the 12-month anniversary after the accounting period, and then use the extra 12 months that they're allowed to make an amendment on that claim, on that return, in order to file their R&D claim. So they may be delaying the R&D claim up to 2 years, using the full 2-year window within which they can make a claim. For companies who regularly use that fact pattern, they may still be required to pre-notify. Even though they've got a consistent record of making claims, they may be obliged to to pre-notify with HMRC. And this is starting to bite now. So as it was introduced in 1st of April 2023, the accounting period for that is typically ending 31st of March 2024. And there was a deadline of having to notify within 6 months of that. So 30th of September is the first deadline within which we're starting to see companies need to make pre-notification. And a lot of companies are still unaware that they need to make that pre-notification. And without that pre-notification, HMRC will reject the claim. So if you've got a March year end, or maybe even an April year end, you need to do some checks to see the extent to which you're obliged to pre-notify HMRC. Don't fall back on thinking, well, we've made previous claims and therefore we're exempt, because there are some gotchas in that in the legislation. That means that some of the previous claims that you've made, if they've been made via amending a return, they will not count towards that exemption. So you need to go back and check it. Luckily, doing a pre-notification is a relatively simple administrational effort, sort of information that you're familiar to be doing on the AIF, the additional information form, which really just some information about the company, the various reference numbers, unique tax reference number, who in the company is the internal contact, if you've got an agent supporting you, the accounting period that you're making the pre-notification for, and then the summary of the activities. It's usually just a quick, maybe a paragraph that you're doing software development, or you're developing a new pharmaceutical drug, or you're doing a new manufacturing trial run, or whatever the case may be. But just a summary of it's not per project, it's just a quick headline as to what's the nature of the R&D that you're intending to perform. But the key thing here is there is a timeline for this. If you're a March year end, then you may be coming up to that timeline at the end of this month. So you need to just maybe talk to your advisor, confirm with them whether you need to pre-notify. They may have already been in contact with you, and that's great. But we know a number of advisors probably haven't fully understood some of the rules around the exemptions, and companies are being caught out when we're sort of prompting them, even where they've had advisors elsewhere. They've said, "Oh, we didn't realise this." So if one of the things you take away today is do check. Do I need to pre-notify my for the R&D? Because otherwise, you're at significant risk that you will lose the ability to make that claim for that accounting period. Okay, not to scare you, but it's a simple exercise, but you just need to be done. Again, if your advisor hasn't helped you on this, maybe talk to your more Kingston Smith rep, and they'll redirect us to ourselves, and Tom and I will be more than happy to clarify the extent to which you need to pre-notify HMRC. So the changes we've spoken about most recently, the new merged RDEC scheme, the IRIS scheme, and then the pre-notification. These are all sort of legislative drivers and that you need to take into account when you're preparing your claim. Another aspect that you want to take into account when you're preparing a claim is how HMRC are processing claims at the moment. And this is an area where you may have seen some of the press stories around this, about some of what you might perceive as poor behaviour. I know CIOT, the Chartered Institute of Taxation, and ICEAEW, some of the professional bodies have, on behalf of many of their members, been challenging HMRC about how they're now processing claims, because a number of areas they're letting themselves down, and I'll talk through how you might respond to some of those. But in order to sort of get us off on the right foot, as it were, it's probably worth saying HMRC recognise that they haven't necessarily put their own best foot forward in this area. So they are publishing new guidelines for compliance. They do. I mentioned the contracting out rules for the R&D. They are trying to push out information on their view on how R&D claims should be prepared, and who could make claims on those. So it's worth just highlighting some of the key messages from some of those things. So the new guidelines for compliance, it's available on HMRC's website. If you Google GS, other search engines are available. If you search for GFC3, R&D you'll come up and see on those. First thing to take about is going back to some of the things that Tom was talking about. This is new guidance from HMRC, but it doesn't change the rules. This is sort of how HMRC would like to see claims done, but it doesn't change the definition of R&D, what the qualifying expenditure is, what the eligible activities are. This is just some guidelines to help you comply when you're making a claim. Some of the key messages that comes out of this is it emphasising the role of the competent professional. Competent professional is R&D speak for the person who's able to distinguish between what is R&D and not R&D. You know, they're experienced in the field, they're knowledgeable about the project, they've probably got some level of academic qualification as well. But they're the ones who can know when the company is just maybe reusing existing knowledge or developing technology where the solution was readily deducible or readily available in there. So the HMRC are currently emphasising the role of the competent professional in identifying your eligible R&D. I say that's typically your technical leader on there, but HMRC are looking for increasing assurance that they are a competent professional. As I say, they've got those qualifications, they've got the experience, they've got the knowledge of the technical domain within which you're working with. Some of the other areas that HMRC are focusing on at the moment, and we'll see this is coming through in the compliance checks that are is how the qualifying expenditure should be determined, and in particular they're looking at making sure you've got good record keeping to support those claims. I know this is going to be something that Tom will talk about later on, so I won't dwell on it here, but it is worth just, if R&D claims are important to you, just being cognizant of what those new guidelines for compliance are. Again, it's really just best practices on there, and there shouldn't be any surprises on there, but it does help emphasize sort of what HMRC are looking for when they process claims and check them for compliance. Tom, I don't know whether you want to talk about sort of the background as to the increased compliance check.
Yeah, I think anyone who's been involved in sort of startups and businesses, or as a CFO or anything like that, will know that there's been a lot of talk about the R&D regimes in not particularly a positive light over the last couple of years. And I think a lot of people have different opinions on this. But my opinion is that this is in a weird way a good thing, in that HMRC are finally addressing some of the issues we've had over the past 10 years of essentially cowboy advisors coming in and making claims for projects which simply don't qualify. I'm a taxpayer, as probably most people on here, and we'd all like to think that our taxes are going towards R&D that should be supported, as opposed to R&D that is not R&D, and is essentially just being taken by a cowboy advisor in some way. But the result of this has been that there is some, I guess you would call it, collateral damage as a result. HMRC have been opening up a lot of compliance checks, and to some extent these are being opened somewhat randomly. So you'll notice we mentioned on there the mandatory random program for compliance checks. There is obviously that program, but I would go further and say that a lot of the inquiries that have been opened up generally have been sort of random to some extent, or have been as a result of just some small red flags that have sort of popped up. Now, some places we've been reasonably lucky, not too many open. Some places have managed to get themselves on sort of blacklists, I would say, and HMRC are inquiring into every claim that there is. But anyone who has gone through one of these compliance checks will know that HMRC are approaching this very differently to how they have done in previous years. It always used to be much more of a sort of collaborative approach. HMRC would pop in and would be looking to understand what has actually gone on with that R&D that occurred during the period. Now it very much feels like it's HMRC coming in and saying, we don't think it's R&D, and coming up with any reason why they don't think it's R&D. This can be quite difficult for businesses because they might not understand the legislation in the detail that perhaps a HMRC inspector should understand the detail. But in effect, there are a lot of compliance checks. I would say if you are confident that you are doing R&D for tax purposes, as per the definition I mentioned earlier, you shouldn't really have anything to worry about, with the exception of it is going to be very annoying for a while. You're going to have some very irritating questions asked by HMRC and someone there at HMRC turning around and saying that your project's not innovative when you know full well that it is. But that's about the extent of it. I don't know, David, if you wanted to cover off any points I missed on the next slide there.
So it's worth just putting it into context. There's been various different reports trying to estimate the level of fraud. At one level, there was a thought that perhaps 1 in 4, 24% of the claims were being fraudulent from within the SME community. As it currently stands, the latest stats we saw, 20%, 1 in 5 R&D claims are now subject to a compliance check. So HMRC have not only increased the volume of checks that they're doing, they're also the behaviour on those is much more sceptical, and it is harder to companies are finding it more onerous to support the R&D, and there's obviously a worry there that what are genuine R&D claims, as Tom alluded to, they're being discouraged from making claims, and that's absolutely not the aim either of HMRC or the policy goal with the R&D incentives. So what we're seeing are HMRC responding to, obviously they were under a lot of pressure when they're being told that 7.6 billion that is being spent every year, nearly a quarter of it is going on fraud. They're under a lot of pressure to respond to that, and they've probably gone a little bit over the top, and hopefully it'll start to even itself out now as some of those rogue advisors that Tom mentioned are starting to be shaken out of the market, and as companies better understand how they can better support, respond to those guidelines for compliance, etc., and prepare clients in a much more structured fashion. But in terms of how HMRC are sort of processing claims, typically claims are being handled by what's called ISBC, Individual and Small Business Compliance Unit, and they've opted for what they term a volume compliance approach. So they're just, as Tom said, sometimes your name just gets pulled out of the hat, or they're using some of the information that's provided in the additional information form to do some risk profiling based on maybe the sector or the advisor that's helped you, or the claim values against some of the benchmarks that they've got. And so using that risk profiling, they're triggering a lot of claims. If you're doing R&D, you don't need to be worried, but there are responding to claims, especially if they've done the claims maybe 2 or 3 years ago, can take quite a lot of time. So it's putting emphasis on preparing the claims well in the first place, the record keeping that Tom is going to talk about later on. Unfortunately, having said that, HMRC have sort of responded to that fraud and error by sort of increasing the level of scrutiny on it. The HMRC themselves have probably let themselves down. The individuals that are helping them with the ISBC, from our experience, that haven't been particularly well trained. They've got very little knowledge of R&D life cycles or the technical domains that various industry sectors might work within. It's very difficult to have a proper engagement with them, as Tom mentioned earlier on. Previously it was a very collaborative approach. Now you're getting a relatively anonymous email address that you need to exchange for. Cases get picked up by one agent or another agent, that there's no sort of continuity of who you might talk to. So HMRC probably aren't, as I say, putting their best foot forward in terms of preparing claims. One hopes it's a temporary thing as the new influx of inspectors that they put into this area to help with the following compliance, as they start to get experienced and a bit more knowledge about the domain. Hopefully they'll be a bit more understanding and aware of the context within which R&D is being conducted. But at the moment, HMRC, in response to those elevated levels of fraud and abuse, are much more sceptical. They're using the information that was in the guidelines for compliance to push what will tell us why you're a competent professional. You regard them as a competent professional. They're challenging the extent to which the R&D is meeting those advances and the uncertainties that Tom referenced. And so sometimes when you're in a compliance check, it can certainly be a very onerous activity and process that you need to go through. There are a number of areas where genuinely, if you are in a compliance check, it's probably worth seeking some advisor input in terms of how you respond to that check. Yeah. It's worth saying that you can get through the process. A number of clients that we've worked for have successfully replied to a compliance check in one round of documentation, and the claim has been agreed as it was submitted. We've also worked with some clients who've prepared the claims maybe in-house, or they've been prepared by an advisor who's unable to help them support the compliance check, and we've gone in and it's been very difficult to support the claim in those circumstances. Maybe some of the eligible activities aren't necessarily as eligible as the company thought, or some of the qualifying expenditure doesn't necessarily meet the rules in order to be considered qualifying. So it's worth, and in those circumstances, you have to sort of put your hands up and say, okay, let's adjust the claim. But it's worth talking with an advisor, even if they haven't necessarily prepared a claim, just to make sure that you understand how HMRC are approaching these claims. Maybe there's some best practice that you can pick up from the advisor, but also that there are some tactics as well as strategy that you might employ to helping companies respond to that sort of more aggressive approach from HMRC. Tom, I think you might want to pick up here on some of these things in terms of how you might get your retaliation in first, as it were, in terms of preparing claims so they're less likely to be subject to those compliance checks, or it's easier to resolve some of those compliance checks.
Absolutely. And I think in the interest of time, I know we've got about 10 minutes left. I'm going to sort of canter through these quite quickly, but I appreciate there might be people on the call who want to know a bit more about this. So please do reach out and we can have a bit more of a chat. But,
are you still there, Tom? You're breaking up, Tom. Are you there? I'll pick up and Tom, if you can get back on, that'd be great. So as I mentioned, that there are a number of ways that you can sort of preempt some of that the scrutiny from HMRC. Mentioned before, those guidelines for compliance, the importance of record keeping, the importance of involving the competent professional, your technical leadership in those. Make sure one of the things, and maybe this is a function of the pre-notification window, think about your R&D claim throughout the year rather than just in that immediate filing window that you've got, or the deadline for filing. So pick up maybe contemporaneous documentation, maybe capturing some of the nature of the R&D that you're facing, sort of what was the advance you were seeking in this particular phase of the project, or what was the uncertainty that you were facing during that cycle. So try to think now about, as you begin to prepare claims, capturing some of that information on a more contemporaneous basis. It's also worth saying, while some claims can get bogged down, there are some alternatives, strategies that you can adopt. And again, it's probably worth talking to an advisor with respect to those. Some of the options are to go to a first-tier tribunal. A number of cases are working their way through that process at the moment, if you disagree with HMRC. And often HMRC are losing those. So that I wouldn't say they're getting a bloody nose as such, but they are, a number of the findings are going against their original position, and so they're having to change their position as they go forward. Within HMRC, rather than say going to a first-tier tribunal, which can be a bit more expensive, there are things that you can alternatives that you can do that within HMRC. There are independent reviews. SOLS is a sort of a solicitor type service that allows you to have an independent review of the caseworker's work, and is it reasonable, the conclusion that they've come to, or that there's ADR, alternative dispute resolution mechanisms within HMRC, and that's something we found very helpful and pragmatic. I know where we've taken cases through that they've quickly been found, thankfully, in our favour, and so it's been a much quicker way to get to, rather than lots and lots of rounds of correspondence with anonymous people and caseworkers who are picking up and putting down lots of different cases. So there are, if you are bogged down in a compliance check, it is worth talking to an advisor and saying, well, what alternatives do we have, rather than this interminable sort of back and forth on whether something's R&D or not, or whether some costs qualify. As Tom mentioned, we're cognizant of time, and so just wanted to finish on a couple of points. I've already dwelled on you don't need an advisor to help you with your claim, but in an environment where claims are being scrutinised more heavily, when there is lots of change to the legislation around what claims you get, what schemes you should be claiming under, and your ability to claim under those, it's probably worth talking to an advisor who will just sign path the way for you to make a claim internally. But there may be a number of sort of flagging some of the red flags that you might encounter, and how you might preempt those in your preparing of the claim. As I say, I'm conscious of time. Tom, I don't know if you've got any questions that have come up on the. If I stop sharing my screen, I may be able to see some of those that have come up.
Whether people can hear me or not, my computer seems to be struggling, but we haven't had any questions from anyone. However, if anyone does want to get in a last-minute question, then please do. I am monitoring the. Oh, we've got one. Will the should be shared? Yes, and we have a slightly longer version, and we've had a couple more. On average, how long the claims take? It seems to be many months. Yeah, so it really depends. If it goes to compliance check, so if it's a compliance check, it could be anything to years even. It depends on what's happened. Whereas and that can be as short as 1 month for a compliance check. We had one that we sent back one letter, and it was resolved with one letter. 100%. Qualifying, all that sort of stuff. So it really depends, and it depends on who it goes to at HMRC. If you haven't had your payout within, say 2 to 3 months, do go ahead and there's an email address you can email HMRC. There's also the corporation tax line number. Now you will get fobbed off most likely when you HMRC on the corporation tax line number. However, it might be that there is something or there is a reason in some way as to why you haven't been paid out, and you will know, or you're more likely to understand what that reason is if you phone that number. Sometimes you get things like it's been netted off against another tax liability somewhere else, or these kind of things. Or person at the end of the phone says, we haven't got something. It's the next one.
You're breaking up quite a bit, Tom. Shall I pick? I don't know if I'm clear. Then maybe it might be easier for me to speak. So yes, the presentation will share. On average, how long is a claims taking? As Tom said, typically we're seeing processing windows of about 2 to 3 months. Obviously, it depends on some circumstances. It may be quicker than that. It seems to be taking many months. There are obviously. Depends on whether you're subject to compliance checks or not. We know some compliance checks have got bogged down. We've access to some of the internal forums within HMRC, and I know I've escalated a claim last week to one of the directors within the HMRC, who was able to give it a nudge and help it move forward. So there are ways in which you can escalate it, and as I spoke before, if you are being bogged down, there is the alternative dispute and the independent review that might be a cost-effective way of processing it. I see Heather has asked, what kinds of new costs can we now claim under the new merge scheme? So Tom mentioned earlier on that the definition of R&D hasn't changed, and apart from the addition of maths, and at the same time as maths was introduced, the government used it as an opportunity to refresh what type of qualifying costs you can claim, and so you can now claim for, say, data licensing and cloud computing type things. But that sort of predates the merged scheme. I suspect that for the merged scheme, the costs that you would not have been able to claim for before that you can now claim for are likely to be costs where you're subcontracting work out to someone else, but you're doing it in a manner that it's clear that you intended R&D to take place, and you've done. That's more than just a passing contemplation that, oh yeah, that's likely to be difficult. There's R&D taking place there, but by my supplier. There's a bit more involvement there in that maybe your own technical team have been involved in the specification. You can sort of help flag why there'd be an advance needed or why there'd be an uncertainty faced in that. So the type of new costs that are claiming under the merge scheme are typically going to be related to where you're working with suppliers and the extent to which you can now include subcontracted R&D costs. Those subcontracted R&D costs, as an SME, you're always able to claim those, but as under the RDEC, people who claimed previously under RDEC, they'll now also be able to claim for those. That's the main answer to that one. I don't know if Heather, if you had another aspect of the question that you'd wanted to talk about there, but as I say, that there's been some legacy changes to include the cost categories, and then as a consequence of the merge scheme, the fundamental change in terms of relationship with your customers and your suppliers as to who can claim the R&D within that sort of contractual chain. Okay. I think we're getting to the end of the allotted time. Tom and I, obviously, our details will be in the deck that we distribute for you, and you can reach out to any of your Moore Kingston Smith colleague service team, and they'll redirect you towards us. I think the key message for you to take away is that we're in a new normal. I'm sorry to use a cliche. The old rules that you used to prepare R&D, they're unlikely to help you going forward. You do need to sit down and think about how you want to navigate the turbulence that you were seeing from HMRC, the changed legislation, and how you want to secure the benefits. You know, it's still a very generous scheme, and it's still critical for companies as they grow and invest to receive this benefit. But you don't want to be putting it at jeopardy by, say, not properly preparing the claim or failing to get, say, that simple pre-notification in place. So the takeaway from today is that you do need to go and think about preparing your R&D claim. As an advisor, I'm naturally going to say it would help you if you talk to an advisor on that, but at least be aware from today's conversation that there are issues that you need to face and address in preparing claims. Okay, so on that point, I don't think we've had any other questions coming in. So on behalf of Tom and I, thank you very, very much for your time today. As I say, if you're doing R&D, be confident about making the claim, but you will need to prepare that claim a little bit different going forward. Okay, thank you very much for your time, and look forward to talking to you in the future. Take care and goodbye.